Welcome back to the premier stage here at Wales Tech Week 2023. Sponsored by LexisNexis Risk Solutions, our next session is on improving access to finance in Wales, how FinTech is reshaping credit decisions to enable greater financial inclusion. In a world grappling with economic disparities and a persistent cost of living crisis, traditional financial models often fall short in assessing the creditworthiness and financial needs of marginalised communities. This panel discussion will provide the latest insights into the current state of financial inclusion in Wales and will highlight some of the exciting initiatives already underway to promote greater fairness and transparency for all, using alternative data, advanced analytics, and innovative new techniques for modelling. Chairing the session is Sarah Williams-Gardner, CEO of FinTech Wales. Sarah is the CEO of FinTech Wales, the not-for-profit membership organisation for the fintech and financial services industries in Wales, whose mission is to establish Wales as a globally recognised hub of fintech excellence. Sarah has had an extremely successful career in tech and was a founder at Starling Bank, where she pioneered the gambling block. Please welcome Sarah to the stage.
Diolch. Can I just test with everyone? Can you hear us? Because I don't know anyone else, I was struggling to hear that. So if you do struggle to hear us, not that I'm a quiet person, don't look directly at me, Matt Hyde. But if you struggle to hear us, please just make that known to us and we'll do our very best to make sure we convey that. Thank you very much for that introduction. That's extremely kind. I'm not sure I deserve all of that. But this panel is going to be highlighting some of the things that we are doing in our fintech sector here in Wales to address what we know is a really, really difficult time for individuals in the cost of living crisis. We've come off the back of the pandemic, we've hit the cost of living crisis, and only knows what's going to happen to the rest of the world as we see increased unrest. But not that we can fix all of that. So we're going to focus on something where we can really share some insights and share some knowledge on where you may wish to go from this room, knowing what FinTech can do to give more people fairer access to fairer products to help them improve and manage their financial lives. I'm joined by some very esteemed colleagues who will talk much more knowledgeably in their area of expertise than I will. So I'm going to come to them first. I'm going to ask them to introduce themselves. I'm going to ask them to be quick and pithy with a quick introduction as to why they're here and the products or the company that they're representing. So Neil, I'm going to come to you first from the sponsors. And there was a reason why we were talking about this panel and why LexisNexis Risk Solutions, I find that difficult to say, by the way, why Lexis was so keen to actually support this. You're doing a huge amount in this area. So why don't you introduce us? Tell us the role that you play and what Lexis are doing in this area.
Yeah. Hello. Can you hear me okay? Hi. Well, firstly, thank you for inviting me to the panel. This is a topic that we are really, really passionate about at LexisNexis, as Sarah says. So financial inclusion, that's the topic and the perspective that we look at this problem from. I don't think it's a surprise to anybody that the last year or so has been particularly tough. As Sarah suggested, the cost of living crisis has been very detrimental to many consumers and many individuals in society. The good news is we would suggest that we are already moving away from the cost of living crisis into something that we would describe as a stagnant living standard. So I'm not sure whether you would prefer that situation or still to be in a cost of living challenge. But what that effectively means is that the challenge that we saw over the past 12 months is being managed by inflationary controlling measures. We all know what they are. Essentially, one of those measures is to increase interest rates. By increasing interest rates, we subsequently see the cost of credit increasing as well. So it's even more important than perhaps it was 12 months ago that we try and do something about this for those in society that are perhaps more susceptible to the least affordable types of credit that are available in the market. We've done a financial inclusion study. We've looked at the UK specifically, but today I'm here to talk to you a little bit about what we've observed for the Wales area and as an industry, what we might be able to do about tackling the challenge.
Fantastic. Neil, thank you very much. And we'll come back to that because the research that Lexis have undertaken is quite eye-opening, and it really shines a light on Wales in particular, and how we need to really focus on this. It's my absolute pleasure to introduce you to Lee Phillips. Lee and I have known each other a long time. I'm very privileged to call her a colleague and a friend. Lee represents the Money Advice and Pension Service, and they look at education, they look at policy, they look at what needs to be improved in the regulatory environment to help people with everything from their pocket money to their pensions and all the steps in between. Lee's doing some fantastic work here and represents the Money Advice and Pension Service for Wales. So Lee, why don't you introduce yourself and give us just a bit more about what you're doing here in Wales with your team?
Okay, thank you. Prynhawn Darpawr, good afternoon, everyone. I'm the Wales manager for the Money and Pension Service, and a part of my role over the last 3 years has to look at the UK financial wellbeing strategy and create a delivery plan that's fit for Wales. So in Wales, of course, we've devolved government, we have different policies, we have different networks, we have different environments, different stresses and strains on the work that we do. So creating a financial wellbeing delivery plan for Wales, it was massively important that we engaged right across the sector. It's all about collaboration. And so we hosted 33 different roundtables across Wales to look at various subjects. And we looked at children and young people and how we support and educate them at home, at school and in the community. We looked at savings and how we can build resilience with people. We looked at credit, and we'll talk a bit more about that as well today. We also looked at access to debt advice, how we plan for and in retirement. And we looked at those through the lens of gender, through the lens of mental health. And in Wales, we also looked at rural financial wellbeing, digital inclusion and financial wellbeing, minority ethnic communities and financial wellbeing, and energy use as well. Because, of course, in Wales, we've got something like 17% of households off the grid. So that's what we're doing. And so I'm going to be talking a lot today about our delivery plan and the collaborative work that we do across Wales.
Lee, as always, thank you very much. We're also joined by Rowan Whittington, who is the very formidable, very talented head of product at Confused.com. I think that's your right title. You always tell me off that I just make your title up, and because she's just such a brilliant person, she does so many different things. We're delighted to have Rowan representing the comparison site Confused that she works for. Brilliant, invented in Wales business, which is helping many people access good and fair financial products. But maybe you'll just talk to us a little bit, firstly, about the job and what you've been doing more recently.
Lovely. Hi. Thanks, Sarah. Very comprehensive introduction, so I won't spend too long on the mic. I'm from Confused.com. I'm director of product, so working very much to make sure that our propositions are working for our consumers and our customers. Confused.com has always had a mission to try and help people save money on their car insurance, home insurance, travel insurance, any other insurance categories, and that is an even more important mission now than ever. And we want to keep working with other people across the sector to make sure that we're using data in a sensible and sensitive way to increase access to what is fundamentally a legal requirement, car insurance, if you want to be able to drive. So it's not a privilege, it's something that we have to help people get access to. So whilst for the last 20 years, 23 years, I think now, Confused.com's been a proudly Welsh company, we have always been trying to do that. It's even more important now, and we are looking to try and support more and more people to get on the road to be able to access their jobs, their livelihoods, their family and their friends.
Rowan, thank you very much for that. Really important just to give people that ease of understanding and insights into, as Rowan says, a compulsory purchase, not something that is a luxury, but a compulsory purchase, and something that, you know, if you live in the valleys, dare I say it, and you depend on a car to get to work, then even more important in your life. Mark, thank you very much for joining us. Mark White, who is the Chief Executive of Smart Money Cymru. Mark represents what we call responsible lending. And responsible lending is something that I learned a little bit about back in sort of 2019, when I had the absolute privilege of partnering with an amazing, amazing lady called Sasha Romovich. Sasha started Fair for All Finance, and Sasha and I worked together to structure that organisation. Sasha has gone on to provide the 90 odd million pounds that she's been given by the UK government. That's money that's come out of dormant bank funds. These are funds that normally sit and have nothing done with them. But she is using that and deploying that to support and to give competitive advantage to the affordable and fairer lenders, which includes the credit unions. So Mark, just help us understand what your role is at Smart Money Cymru, and also the role that the credit unions play in this market to give better financial access in these times of crisis.
Thank you, Sarah. As Sarah said, my name's Mark White. I'm Chief Executive at Smart Money Cymru Community Bank. We are a credit union, and I can hear the question in the audience, what is a credit union? We're a mutual cooperative. We're owned by our members, one member, one vote, similar to a building society. Financial inclusion is actually written into our constitution as an organisation. It's part of our social mission. What we do is we encourage savings, but we also provide loans from members' capital to members. We have about 11,000 members across Wales, but predominantly focused in the southeast Wales valleys. We have about 2,500 borrowers at the moment, and a loan book of about 5 million. So small in global terms, but having an impact certainly on local economies in southeast Wales. We lend to anybody that we think can afford a loan. You don't have to be financially excluded, but it is a fact of life that a lot of our borrowers and a lot of the people that are members with the credit union are financially excluded. I suppose we've got two missions currently in life as an organisation. We want to mainstream that whole responsible finance sector, and I don't know whether there's a corresponding irresponsible finance sector, Sarah, but probably is. We want that responsible finance sector, of which we are a part, to become much more mainstream and work alongside more commercial private sector lenders, and create a much more vibrant and open market, because a lot of the people we're working with just don't have that sort of choice. So, you know, that's smart money in a snapshot. We're moving also from savings and loans into transactional banking services as well. We're doing that on the back of FinTech. It's been we're in terms of FinTech, we're in baby steps at the moment. 4 years ago when I joined, we were a completely paper-driven organisation. We were turning around loans within 5 days. Now we're turning loans around in 5 minutes. So that's the difference that FinTech has made to our organisation. And the more that we can do that, the more people we can help. It's as simple as that.
Mark, thank you very much for that introduction. And we love people who are new into FinTech, because that's the underlying value that FinTech Wales brings, is connections and collaboration to support growing solutions which are very much needed. So just building on from that, let's come back to you, Neil. Let's set the scene with some of the data points. So you've done a phenomenal piece of research. You've been doing this now for a few years. You've recently updated it. Tell us just how bad it is in Wales.
Yeah. This is quite a difficult set of statistics for many people to hear, I would suggest. But financial inclusion is a challenge. It's not just Wales, but Wales is disproportionately affected when compared to the rest of the UK. So one of the first sort of stark statistics that I have is that 1 in 6 people in Wales are categorised as financially excluded. So financially excluded, a loose definition of that is those individuals that do not have data or sufficient data in terms of recent information for which a lender or other creditor to make a decision against them, either accept, decline or refer. Now, that means that those individuals in question can't access products and services that they are entitled to in the same way that we would all like to think that we are entitled to services as well. So that's the first one, 1 in 6. That's quite a stark figure. It equates to 370,000 people. The second one is it disproportionately affects the elder demographics. So those over the ages of 36 are more financially excluded than those compared to the rest of the UK. So what I don't have with me today is the insights into exactly what would be driving that disparity. Why is it that Wales elder demographics seem to be more effective than the UK? But that is something that we would certainly be seeking with other industry partners to sort of investigate. Another one is 43,000 of these individuals do not have a credit file. So this isn't even some data or some insights as to whether this individual could get a credit product. This is literally no data that would be viable to use for that type of decision. Now, we know that there are other tools available in the market that are not derived around the sort of traditional credit scoring methodology, and some of those that we could potentially talk about later, like open banking and alternative data. But nevertheless, that is a huge number of individuals in Wales that don't appear on a credit file. 22 to 25-year-olds have a dependency on subprime lending. So this is in comparison to the rest of the UK as well. So that obviously has implications in regards to helping them manage their money in a consistent and a sort of successful way, if that makes sense. But potentially, this is a gateway into what is becoming a more common term in the industry of financial vulnerability. So a dependency on subprime lending at higher interest rates is not something that we would like to see. We would like to see these individuals have fairer and more affordable access to credit. And that is the challenge that, as an industry, we are seeking to address.
So there's some fairly stark figures there. 1 in 6 people who haven't got access to bank accounts and banking facilities. I mean, just think about that for a moment in your daily life as you go about what you do day in, day out. How would you do that without access to a bank account? How would you do that without access to credit? I think we take some things for granted that we need to really think about there. So I think, the work that you've done just to highlight that is really important. And you talked about subprime. I mean, firstly, you talked about the elderly as being over 36. Jesus, how old am I then? I didn't think elderly were over 36. That's the first time I've seen that categorization. We're going to be coming back to Lexus about that demographic.
Yeah. I do, and that's a very good point, and I think it's the wrong choice of language, if I'm being honest. But I think
wanted to say that.
I think the point I was making, I think in terms of, I guess there's an expectation that as you go through life, you get more attuned to the financial services ecosystem. You learn how to navigate it, and in some instances, game the financial services sector. But the stats would suggest that for Wales, that a lot of individuals just aren't able to do that at the moment, and that is something that we need to be looking at.
Well, I think jokes aside, actually looking at people, looking at that age group. I mean, 36 is not old. To think that people are financially excluded, if you told me older demographic, I would have gone up to, my mother's age, in the sort of 80s, 90s, and I would have been able to relate to that. So again, I think that's really eye-opening to say that this is happening in younger generations. I think the other point is that increased engagement with subprime. Now, subprime are the irresponsible lenders, Mark, to your point. We know who they are. They are mercenary in the way that they lend money. So this brings me on to some of the work, I think, Lee, that you've done. And I do want to just say that one of the people that Lee works with, which I love this, is someone called, you do call her Lizzie Loan Shark, don't you?
Yes, but not in
she's
public.
not a loan shark, right? She is not a loan shark. This is one of Lee's sort of colleagues or collaborators that actually works to identify the loan sharks and to make sure that people have access to the type of funding that people like Mark, the responsible lenders, are doing. And just before I ask Lee to talk about some of the work that you've done on education, because I love, as you well know, I love your talk, learn, do. But just one point, when I had the absolute privilege of meeting Lizzie Loan Shark, who is lovely, she's a bit like a pocket rocket, isn't she?
She certainly is, yeah.
What do you think the typical characteristics of a loan shark in Wales would be? Would you think that's typically male or female? Who would think it was male? Put your hands up. Who would think the age of a loan shark? Under 50, put your hands up. Oh, okay, we still had quite a lot for under 50. Over 50? So would you be massively surprised to find out that the two worst loan sharks, I think I'm going to get this right, and if I'm not, she's going to correct me. The two worst loan sharks were females over 80. Unbelievable. Let's talk about talk, learn, do, how we can educate people to avoid these people.
Sure, okay. So one of the things a lot of people say is that we need to ensure that children and young people have financial education. And one part of our delivery plan is focused on children and young people. And what we want to do is ensure that children and young people get a good financial education in school. Absolutely. Everybody says, when you ask somebody, where should children learn about financial education? And everybody says, in school. Absolutely. School teaches us the principles of financial education. But it's at home where we put those principles into practice. And we, through a piece of research we did with Cambridge University, discovered that by the time a child is 7 years old, those money habits and behaviours are already in place. So we need to get to children before they're 7 in order to start building those behaviours and those mindsets. And school is a great place to do that. But really, at home, that's a really fantastic place. But when we asked what resources out there for parents, what can parents do, where can we point parents in the direction of, there was very little. So back in 2015, 2016, in Wales, we worked with Flying Start and the Families First and Welsh Government, and we created an intervention that linked onto other parenting interventions. It's called Talk, Learn, Do. And it was the parenting practitioners themselves that designed it. They co-designed it with us. And we reached 1,000 parents in the pilot stage. And what we did was link it to parenting programs. So things like pestering, kind of what's the wants and needs? Why am I saying no as a parent? When I'm in the supermarket, what can I do to help teach my children? How do I explain where my money comes from? Do I give pocket money? Don't I give pocket money? Is my family... do we give pocket money every week just because? Or do my family and my children earn that pocket money? Or do I just expect them to fill the dishwasher up because they're a member of my family and I expect them to fill the dishwasher up? So these are the kind of questions we did with Talk, Learn, Do. And it was really interesting because more children and young people understood why their parents were saying no to them. More parents and children were able to manage the money better. But one of the things that came out, and an unintended consequence, we wanted parents to be able to talk to their children about money. It wasn't about what's an APR. It wasn't about this is the difference between a credit card and a debit card. It's just how do I have these conversations? That was what Talk, Learn, Do is all about. But one of the outcomes from that was that we evaluated it before, after, 6 months and 12 months later. 2 hours this intervention is. It's only 2 hours. And before the parents went through the intervention, 38% of them were struggling with bills or credit cards or hadn't been able to pay one in the last 3 months. They were over indebted. 12 months later, we revisited them again, and only 14% were over indebted. And that was 24% came out of over indebtedness because they had started engaging with their children and talking about money. And so that was an unintended consequences of Talk, Learn, Do. But recently, what we decided to do was create it in a digital way so parents can self-serve. Because at that time, you could only access Talk, Learn, Do if you were seeing a parenting program or in a community program. And so now Talk, Learn, Do is digital, it's bilingual, it's available in both Welsh and English, and it can self-serve. So if you haven't seen it and you're interested, or you have children under 7, or you know somebody who does, Talk, Learn, Do, and it will come up on the site called Money Helper, Helper Ariane, which is the Money and Pension Service consumer website.
Fantastic, isn't it? We love unintended consequences when they are so positive. Absolutely fantastic. I just love what it's doing, really do. Fantastic stuff. So coming on to yourself, Rowan, what is it that Confused can do, does do, and offers to people from that financial inclusivity perspective? You're the product designer. What have you designed?
I actually didn't design it. It's been around for a while. But as you said, price comparison websites started 23 years ago in South Wales, fundamentally to help people choose the right insurer. You know, we wanted to make sure that people knew what was available to them, what they could and couldn't have. And through that 22, 23 years, our proposition has really changed to not only just put a price in front of customers, to also say, this is what you get for that price. Here are helpful articles that explain to you whether you do or don't need motor legal protection, whether you do or don't need breakdown cover. Do you want that thing? Do you need that thing? Here you go. Here's something useful and supportive that should hopefully help you in making that decision. And yes, we are a commercial entity. We do make money, but we make our money regardless of who you go to. So we work with our consumers to really make sure that they're making the best decision for them and they're choosing the right insurer for them. So I think fundamentally what we do at core is help people make the right financial decisions in car insurance, home insurance, van insurance, many other insurances. But we're actually also part of a group called RVU, who owns uswitch.com, money.co.uk, tempcover.com. We're now a part of a group of brands that are really working to help people in lots of other ways. So I want to use an example actually from Uswitch, which we did during the lockdowns, during the energy crisis. So you're a big brand like Uswitch and you're used to helping people swap their energy. We couldn't help people swap their energy when the price cap came in, and we said, well, what can we do that is helpful? How can we support our consumers through this time? And the Uswitch team jumped to attention and created the Uswitch app, which was already existed for another purpose, but we've repurposed that to link into your smart meter to support you in actually getting the right information about your energy tariff so you can make decisions on the spot about whether you want to turn your boiler off or whether you want to turn the radiator down. And that includes tips and hints and tips to help people saving money during that time. So the reason I say that is, yes, fundamentally, we're there to help people get their insurance, but we also really take responsibility for the financial education of people around car insurance. So I would hope that I sat in front of you earlier and said, did you know that car insurance is a legal right? But so many people don't know that. And it's really interesting that you're talking about the younger people as having to go to subprime lenders. Younger people also have to often go to brokers, ghost brokers, people who can help them get in their car because they don't want to pay £3,000 to be able to drive their vehicle. And they're being provided with the wrong insurance for them. They're getting the wrong cover. They're getting into situations where they're actually unable to rely on their insurer to protect them in their time of need. And I think, as Sarah said, relating specifically to Wales and any place with a high level of rural community, and speaking from personal experience, I was driving at 14. I'm from the North York Moors. Like, I was driving a Suzuki up and down a private track, which I shouldn't have been doing. But we were all doing that. You know, we're all driving the tractor home from the pub at whatever time, slightly half cut. And actually knowing that we shouldn't be doing that is part of teaching people how insurance works and what it's there for. People think insurance is just something they have to pay for and that they shouldn't engage in, but actually it's fundamentally there to protect you in your hour of need or in any specific situation that you need. So back to your question, which is what does Confused.com do and what does our group do? We're constantly trying to find ways to better use the data that you have to give us. You know, you have to provide us with all this information for us to give you these prices. But how can we take that to that next level? How can we say, okay, well, actually, have you thought about this? Or have you considered that? Or do you need this piece of information because it's relevant and we've never worked in such a relevant industry. In the last couple of years, the price of car insurance, the price of energy has been at dinner party conversations. 10 years ago, nobody wanted to talk about that. Now it is actually in the news. So we have a responsibility to keep providing the UK community and the Welsh, our local sector with the information to make the right decisions.
Really good point, because Confused will serve the whole of the UK, and obviously, whilst built and born in Wales, they will sell their product more widely than that, which is fantastic. So what we're seeing here is what's the underlying piece is almost about education. So it's using education to teach. It's using information to inform and enable. This isn't about dictating. This is about giving people access to information so they can make informed decisions. One thing that you know when people are in a crisis with money, one thing you know about people who don't have any money is they damn well know how to manage it. And there is a great YouTube video, which I would encourage you to go and see, which will stop the preaching that says we need to teach these people how to manage their money. You don't need to teach them how to manage their money. They manage it to within an inch of its life. But there is a great video that brings this to life, which is by our very own Port Talbot, Michael Sheen. And it talks about being able to be offered money when you need it. So if I walked into a pub and I didn't have any money, I'd left my phone, I'd left my credit cards, I'd left everything at home. And I have done this at the train station, and my lovely coffee shop guy said, "That's okay, Sarah, I can lend you 20 quid. When I went back to pay him back, if I paid him back with a bottle of wine to say thank you very much for doing that, the chances are if you worked out the interest rate, it would be in the thousands of %. I'm not worried about the interest rate in that situation. I was worried about getting my train to London. So being loaned the money and not questioned and being given it at the time that is relevant to you and makes importance is really, really important. Michael Sheen tells that story better than I do about a guy going into a pub. So I'd encourage you to see it. But that brings me on to the responsible lending and the work that new entrants have been bringing to the marketplace. As a founder of one of the challenger banks, our mission was to help people manage their money, give fairer and more open access to money. If you haven't seen the film, go and watch The Bank of Dave. The Bank of Dave is an absolutely brilliant film, which I understand is correct in every sense, apart from, and now I can't remember the name of the band, but he gets a band to come and Death Leopard. He doesn't get Death Leopard, but for the film he does, and leaves, absolutely fantastic. So the Bank of Dave is all about being in the community. It's about supporting the community and ensuring that there is access to money and financial products. Mark, pick up on that and just help the rest of the audience understand just the importance of what a credit union is, because it's not just lending money.
That's absolutely right, Sarah. And the origins of the credit union movement, the credit union sector, was around the encouragement of thrift within communities. So rather than putting their money into a bank, the emerging commercial banks, the idea behind credit unions was to gather funds together to help the community and to encourage a culture of thrift and a culture of savings. Now, that's still core to what we do. So anybody who takes a loan from Smart Money or any other credit union has to save alongside that loan. So if your loan repayments come out at £50 per month, we might say to the borrower, well, you can actually afford £60 per month repayments, so we'll put £10 per month savings into a savings account alongside, which you can't touch until your loan is repaid. And that works very, very well. It actually helps people with managing their money if they get into trouble, because they've got a bit of a buffer there. Then we can cover their repayments for a couple of months if they hit the buffers from their savings account. So, you know, that is core to what we do, is that whole encouragement of thrift and savings. You mentioned Bank of Dave. Yeah, Bank of Dave is nothing new. Credit unions have been around a long time. Community development finance institutions, which is what Bank of Dave is about, has been around for a long time. But I think the thing about Dave is he's brought all of this into the public eye and brought it into the mainstream, which is really important to us. I'd like to go back to the irresponsible lenders very briefly, Sarah, because, you know, we're talking about access to finance. For us at Smart Money, as I said earlier, we were very paper-driven, and for us it was about breaking down the barriers for our members and for the public to access finance. And, you know, that was something that Dave was trying to tackle when he set up Bank of Dave. So for us, the whole technology thing has not been about doing FinTech for the sake of FinTech. It's been about making it as easy as possible for our demographic, a very difficult demographic, to access that finance that they need. The illegal money lenders provide a market service because, you know, you can just go up to an illegal money lender and say, can I have a loan? And it's there. There's no questions asked, there's no check-in, there's no regulation, etc., etc. We have to work against that. The irresponsible lenders, your Wongas, all of those types of organizations, they made a success of their business model because they invested in the tech. So you could go online at 2 o'clock in the morning, apply for some finance, within 5-10 minutes it would be in your bank account. That's what we were up against as credit unions, and we needed to tackle that head on to make it easy and to reduce those barriers and improve the access. So there's a lot of things around the whole Bank of Dave thing. There's a lot of things around the irresponsible finance lenders. There's a lot of things around being responsible finance lenders. But the key is to remove as many barriers as possible and to make it as easy for people who are struggling to access finance as it is for the rest of us.
But I think picking up on that, bringing these things into the mainstream is really important. You know, talked about understanding the facts and data, bringing that into the mainstream, understanding and communicating and discussing finance, bringing that into mainstream conversations, you know, enabling data and understanding and bringing to the mainstream audience fair comparison offerings for all. And, you know, just wrapping that up, you know, the Bank of Dave, which just talks about community and how we can help people, sort of also brings that into the mainstream. Now, I think we're supposed to be asking some questions of the audience. So I'm just going to pose that. And if anybody's got a question, just think about putting your hand up, get yourself ready for that. I think we've got a few minutes to be able to do that. But what I want to do first is come to the panel and ask them, let's look forward. Let's see what we can do to continue to build on this. So with the information and the data that you've got, what do you see next happening at LexisNexis?
Yeah. So firstly, what's really encouraging to hear is all of these different organisations are all doing things to make situations better for consumers in their own way, in their own areas. So that's that's really encouraging to hear, because I think in order to tackle the overall challenge of financial exclusion, it is going to be collaboration across the whole financial services sector. It's not just going to be a data and analytics company that can resolve this problem. But in terms of what we can do to help, so we've obviously got vast amounts of data. We've got 70-ish different data sources, including multiple credit bureaus. What we do is we refine that to a single unique identity, which we call LexID. So what that enables us to do is have these vast amounts of data attached to a single reference point, and then we can subsequently utilize that across all of the different products and services that we make available to our customers. So typically we're talking about credit risk services on this panel, but this data also feeds into financial crime and compliance and fraud checks as well. So what makes us different, I would suggest, in comparison to how the credit industry has been running for the last 35 years, there's been very, very little change in the credit industry. Typically, traditional credit is derived around a historical view of somebody's credit profile. So how well you may have paid your mortgage or your car loan or your credit card, over periods of time. But that data can actually be quite old. It can be up to 6 years old in some instances. So what we do at Lexis is we look for different types of data. We look for what we describe as alternative data sources. And what that enables us to do is offer a different lens on credit to what has been used in the industry to date. And that is typically more recent data points that we would suggest is probably more indicative of somebody's current situation, financially speaking, than it would have been, how you've repaid your loans in the past. So that's not the only thing that's changed within the industry. There's obviously open banking, which I'm sure many of you are familiar with as well. That is another great tool that I would see alongside alternative data and what's already out there as well, being beneficial to the challenge of financial exclusion.
Neil, thank you for that. And I'm well aware that this audience is at a generic tech conference. So let's not assume that everybody knows about open banking, but this is new regulation that the UK has been pioneering to ensure that we can use other points of data. And it's really important that we see organisations like LexisNexis actually using those alternative points of data to offer better services and offer better services to all. Lee, what do you see as sort of continuation to keep educating, keep informing going forward? I know you're going to keep running Talk, Learn, Do because it's just amazing. But what do you see us doing as we go forward?
So, from our perspective, every 3 years we run a survey looking at adult financial wellbeing in Wales. And the last survey was just after COVID, but just before the cost of living increases came in. And 47% of people in Wales do not feel confident managing their money. That's nearly half of us in Wales just don't feel confident managing our money. And then when we break that down, it goes up to 70% when you look at young people. But then it goes up to 82% when you look at single parents. So 82% of single parents in Wales don't feel confident managing their money. So we have a job of work to do. And some recent research from MAPS suggested that in the last 12 months, 9 million people across the UK, not just Wales, 9 million people across the UK were declined credit in the last 12 months. 1 in 20 of those people were declined at least 3 times for credit. And the people who were more inclined to be declined were young people and parents. So there's a sort of synergy there that maybe we need to sort of work together and collaborate on. Also, it was interesting when Neil gave us the data about the sort of the age of people who were financially excluded. And I would say there's a lot of synergy in that to people in Wales who were digitally excluded as well. There's a digital exclusion. So we've got data poverty. People can't afford the data or the broadband. We've got some infrastructure problems still, and I know they're being on their way to being sorted, but there's still infrastructure issues. But there's also a digital skills issue as well. So, there's a call on the tech industry. How can we get people who want to get online? How do we encourage them? How do we create tools that are important to them, that give them the skills, and also for those people who are not really interested in getting online, how can we encourage them to do that? What can you create that gets people online? And I suppose the other thing I wanted to say was that in the UK at this moment in time, it's estimated that £19 billion are in unclaimed benefits. I'll just say that again, £19 billion unclaimed benefits. Now, if we're looking at people going through a credit journey, so they're applying for credit, how can we build in a benefits checker or other available funds or social tariffs or all of those things into that credit journey? So when you're applying for credit, you might discover that actually you're eligible for benefits that you weren't aware you were eligible for. So that could actually reduce the amount of loan you need or any loan at all. So how can we build that financial well-being, that wider resilience for people in that journey? So I'll just leave that there, apart from saying there was a community CDFIs, which are Community Development Financial Institutions. Going to get that right. And there was a couple of CDFIs on a call this morning with the Social Justice Minister. And one of them said that in the last 12 months, just putting in that benefits checker into the credit journey, they'd actually managed to help £377 million out of that benefits back into people's pockets. 78,000 of that was in Wales. And they reckon it was about £5,000 per individual. And that's huge amounts of money. And if we look at that wider financial well-being of the individuals and look at how we can build around each of their credit journeys, understand that. And the last thing I think we need to do is better understand how the apps work and the impact and how that works on people. And I've just spotted Stefan in the audience. I said hello earlier. Stefan is from Bevan Foundation doing some research at the moment on apps. I'm sure you'll be able to say it later. But just to understand how people use those apps and the difference it makes to them and whether or not it is making a difference. So let's have some more research understanding what does work and what doesn't.
We have run out of time. I am so sorry.
Oh, I'm sorry.
So I think a couple of things that have come here. There's a lot of collaboration. There's a lot of people who are part of the solution and wanting to be part of the solution going further forward. Access to more data points, access to more relevant, modern data points is really, really important. We have people within our own region and more broadly across the UK that will benefit from these developments. And as Lee said, it's not just understanding and managing money. Let's just start the conversations. Let's convene people to have those conversations. Let's collaborate. And the more that we do that, the more likely we are to actually be able to address them. I'd like you to join me in thanking all of my panelists, to Neil, to Lee, to Rowan, and to Mark. Thank you very much for your time. They're not going away. And if they were, they're not now. So if you've got any questions, please nobble them as they come off the stage. Thank you very much for listening.